This is the dollar index on the daily scale. Hello, this is Ronnie. I am back here with another clip focusing on gold and silver. I've added a short study of gold in its relationship to the 30-year long bond in the US. It is an important set of relationships. I hope you will find the study interesting and useful. I would like to thank all those who put positive comments, positive feedback on my recent videos. Thank you, I appreciate that. I also would like to welcome all those who joined my channel in recent weeks. There are quite a few of you. Thank you very much for your interest. I'm leaving the option for half price of my services open. I'm providing more details at the end of this clip. For those who are interested, please stay on. And if you still have questions, you can always, of course, contact me through my website. Other than that, I wish you pleasant viewing and have great trading week. See you next week, if not earlier, on my website. Bye now. Gold versus the yields on the long bond in the US. Now gold here is gold priced in US dollars, okay, and I have touched on the relationship between gold to the 5-year notes, the yields on the 5-year notes. If you remember, a few days ago I discussed that, and we saw that there is very tight correlation between the price action in gold and the rates. Yes, the yields going down, gold going up, yields going up, gold going down. Now I bring this chart here on the weekly scale to show you that all correlations do have sometimes deviations, and a certain set of correlations is not a guarantee that it's going to last forever. Even if you have some deviation, it's not sort of guaranteed it's going to go back to the same old way. Now on the weekly you can see situations where gold and the yields on the long bond actually move together in the same direction. Look here, for example, it's crystal clear. This is from 2005 to 2006, almost 1 year of basically moving together. There are many other instances, I didn't take all of them, but if you're interested, if you are able to put these two charts together, these two to these markets, do that, because you can learn a lot of things from that. Look here, for example, huge surge in the yields on the long bond in the US, and you also had a huge surge in the price of gold. You see, that's another instance. It is 2008 going back here to, it's almost 2 years. So if you work with the assumption that they must have inverse relationship, you wouldn't find your place here. You'll be totally lost. Now here's another example. That's 2014 to the deep that we had in 2016. Almost 2 years, you can see. Year and a half, almost 2 years, you can see moving together. Now we come to the actual price action. We see the yields going up amazingly fast in the US. And gold, of course, we know is correcting. Also silver is correcting. I'm bringing it up because there is definitely scope for a divergence now from the behavior that we have seen ruling this relationship in recent times. It is quite possible that we will go back to the situation where they'll move together, meaning, yeah, correction due in gold, fine. We will find potentially that rates will continue higher, but gold will not necessarily go there. It might go back to correct the exit point, the exit point of this trading range, or the inverse head and shoulders. That will look still very normal, but there is no stopping it from doing this. And we could find that both of them in fact can move, amazingly can move together. Okay, so this is a study that I think it is important to keep in mind. Relationship they hold very well, could go on for many years. Like I don't need to stress that. Look here, for example, huge drop in the rates, and what happened here? So it is amazing that in the beginning of the move they moved together, but towards the end of the move you had gold basically soaring while the rates were absolutely collapsing. Okay, so that's behind us. This is the chart of silver priced in US dollars on the weekly scale. There is something very important here that I'd like you to observe before we move to look at the daily and the details, the hourly, etc. You see that the C, if it is an ABC, did not exceed the previous high. This situation here is different, remarkably different than what we have in gold. Gold definitely exceeded this level. Gold is around here, relatively speaking. So we can't really talk about a complete pattern of an ABC. We actually don't have a complete pattern. The only way in which the ABC could be squeezed in here would be to treat the bounce that we have seen from here on the weekly as a failure. Failure in the sense that it didn't manage to climb above the level registered here. I doubt very much that this is the case. And it is important to observe that, because for those who are thinking of a very bearish reading that would take this as an A, you remember we had this for a while, we were working with that. It is not totally out of question. It is still always something that could pop up, but I think the chances of that are not very high. Yet taking this as an A, and what you see here would be UB leading silver to basically melt down under the lows registered here in December 2015 and further, 2015 here, and testing of the level here. In short, this sequence does not look likely, given the fact that we don't have a complete pattern in what you see here. Now, you remember I discussed the 100-year chart, both in the case of silver and gold, and we said potentially fourth wave ended here. That could be our first leg of a multi-year, if not multi-decade run in silver. That is definitely possible. That will become suspect in terms of its ability to deliver this kind of jump if silver continues to sink and it goes back, I would say, substantially into the trading range here, down here. We'll see the details in a sec. So basically my message when I look at this chart, I see huge support coming up on the weekly from the black line, and we discussed this line in the past as well, which is an important line. Silver shot up, didn't exceed the previous high. We don't have a complete pattern, and I think it is it doesn't look very likely that we are now going to sink back under the lows here. That's what I would say looking at this weekly chart. Now let's examine the daily scale. And for short-term trading, I'm sure you are very interested to know how far are we going down here in silver before we have a rebound. Yes, if we have a rebound, because there are no guarantees, of course. It could be that it will continue to sink. I don't think it's likely. I think we are going to have a rebound. I would say that the chances of keeping this bull alive would look very good if silver doesn't need to come and test this extremely important support level that we have marked by the move line that you see here at around 16.2, 16 limit. Breaking this zone, going lower, I would begin to suspect not only that the 1, 2, 3, 4 will be gone, we won't be able to work with that, but I will begin to wonder if this is really wave 1 and this is going to be wave 2. Of course, in theory, you read that wave 2, the correction could go down to just a notch above the origin and it will still work. But I've not seen many cases like that. In practice, when you have a momentum, an absolute crash, the momentum takes it all the way. Okay, so as far as I'm concerned, looking at this chart, I think we have solid support around here. You can see that it was solid resistance and it pushed it down on the first attempt. And now that it closed and it had an absolutely excellent run, it's coming back to correct. Normal, it's perfectly normal, but I wouldn't like to see it breaking this zone. Okay, breaking this zone will instill more negativity in the situation here and could actually reverse the tide. Yes, the tide is now going with the bulls despite the correction. So that is my reading in general for the situation here in silver. And now I'm going to focus on the correction to this advance. We are looking at a correction that so far penetrated the 0.382 right here, and it's on its way to go down to the 50% retracement at 16.99. I am reasonably convinced that we're going to have further downside this coming week. Yes, looks very, very likely. We're going to have further push to lower grounds here, and I would be happy to see silver holding around this level at around 17, 16 and a half. We will check the ABC that is developing here. I'm saying happy because it will just give us, if you like, the pulse of how strong silver here, and I think that silver is quite strong. Yes, the advance defined for us fairly clear waves on the way up. You see, that's the 2-hour scale. We're going up. We had this as 1, 2, 1, 2, 3, 4, 3, 4, and the short fifth leg. I took this as an A. I told you we're not going back there. We are not ready for retesting the top. It's not going to come now. Given the time scale of the advance that the correction now is relating to, it is very unlikely that it is ready to reverse in the next day or two and go back there. Do you see? So I think we are very likely to see not just further decline in the coming week, but even if it manages to come back from 16.6 or a bit lower, it is, in my opinion, not ready to deliver that. It will probably deliver something like that. Yes, another ABC, and then will not surprise me one bit to see it testing again this support level before we get that move, very, very powerful move that will go above the level registered here. Very short term, we are almost certainly going to continue down. You can see on the 30-minute scale that it opened a leg here that is not complete. And very short term, if you go to the 5 minutes, you will see that there is a tiny triangle here. It's almost certainly indicating further slide is coming. Now you look at that, and it is not very difficult to fit, yes, a continuation of the decline towards, let's say, equality. You see the one here, equality between the A and the C. Equality will take it to 16.57, presumably to the other side of this downsloping channel, and that will be just perfect. It'll be perfect. The proportions would look fine, and it is hitting a major support area around here, and we could see the rebound then beginning from this zone. If you go for an extension, obviously it is going to go a lot lower. Extension will take it down to 15.4. Yes, you see the 1.618. This relates to the A. So a C that is extended will go there. You see, that's how I read it. But I think breaking already 16.2 will begin to look very negative. Yeah, will begin to look very negative. If it manages to hold at around 16.2, 16.4, that's great. Just the other side of this channel. And ideally for the bulls, we want to see a rebound back above the head and shoulders neckline. You see we have a head and shoulders here. Yeah, we want to see it rebounding back above 18. Sitting around here will be perfect signal. We are on the right track, treating this movement as corrective, and the main move is up. that will probably deliver another ABC, as I said, and then testing again and coming back. So you have two levels that are critical for the unfolding of this correction. First is between the 16, this zone around here. It's coming just under 16 and a half around here. Okay, it should really stop. I mean, the decline should really stop here. If it stops at the high level and it comes back, all the better. Yeah, that would mean it's very strong. But if it continues to slide, it goes the other side of the channel, fine, it's got to stop there. And then it stops, but it doesn't sort of go sideways. That's bad. That's negative. It does anything like that, that should alert us very much to the possibility that that's going to turn into a 1, 2, 3, 4, and down we go. And that's going to alter the dynamics of the entire thing here. We will have to consider other options. What is certain, if we do get a 1, 2, 3, 4, 5, silver is stuck in the mud for months. Okay, it will not necessarily completely wipe out the bullish potential, but it will put it under a big question mark. Do you see? If this turns out into a 1, 2, 3, 4, 5, how far the correction, the general correction will go? If this is going to turn out to be A, then you're going to have a B and a C, meaning silver will have to go down very low again. And that could jeopardize really the prospects of the bull. But at this point in time, I said we have a zone here that is very, very important, and we have a zone right here. After we come down, if we manage to come back to 18 plus, we're doing fantastic. The bulls can look confidently towards 19.5 to be tested, but I don't think it's going to run through, as I said. And then further sideways price action, but the bull is going to carry the day eventually, begin to go a lot higher. This is gold on the weekly scale, and you can see the inverse head and shoulders going on here for years, and a solid breakout. And now testing back the breakout zone is not unusual at all. It's not unusual at all, and it might look, of course, on the daily scale like it's the end of the world for gold, but continuing to break down is just normal. What can I say? It's just normal when you have such a scale. It's just normal. But if you want to know at what point I think that this bull run would turn upside down, will become really a deadly bearish trap, I think that if it breaks 1250, if it breaks this level, that's very, very negative. Very, very negative, because then the option that we have here with question mark could pop to be our favorite, the first place favorite. That'll be our A, that's our B with an A, B, C, D, E complete. C behind us, we do have 5 legs running up. That'll be our B. Currently everything is under question mark, but that's going to lead to a catastrophic C going down. Yes, and eventually actually clearing the low of 10,050 before coming back. But this process is going to take not 6 months. It's going to take several years. Okay. I said on several occasions, I don't think it's very likely at this point. I'm working with the idea that the breakout here is going to hold. And for now, I have not seen really a sign to tell me that I have to doubt that. So we are coming right from this spot where we thought that our giant fourth wave, do you remember that idea? That the fourth wave might have ended, and we run up, we have our first leg. That's our 1, 2, 3, 4, 5, and silver is correcting. Gold is correcting, and the correction is going to relate, as you can see here, to more than 3 months move. So don't expect in 2 weeks to see gold running about 1,557. It's important to have the time scale in mind. Always keep the time scale in mind, because that is an important guidance for you when you plan, when you make an investment or you go for shorter term trading. that you would have a scale to refer to. Yeah, the time scale is absolutely invaluable. Okay, we run from this point. That's the daily. We have our complete leg right here and came down. You can see it's looking at support. We have a head and shoulders here, and I think we're going to crack this. This coming week we're going to crack this. It might take another day or two, that's fine, but we're going to crack this, and I think we're going down. If we go for equality between the A and the C, yes, this is the C, we're going to hit 1452. If we go for an extension, we go to 1407. So I would take from this analysis, basically, we have a level 1452. If we count 5 legs complete going down to this level, there is a fair chance it's going to come back. If it bounces back above 1485, having delivered a clear ABC, we are on the right track to assume the bull is fully in command, and it is going to head for challenging again 1557. Otherwise, if it goes for an extension, the bull is not dead, of course. It goes for an extension, it reaches towards 1400 zone. Fine, provided we see a robust rebound from this zone back to 1485. Very, very important. It doesn't do that. It sags, it stays around here. Very negative. Very negative, expect further drop. And it could be that, in fact, instead of treating this as an ABC, we might have to treat this as a 1, 2, 3, 4, 5. Okay, that's a completely set of dynamics, very different from what I am expecting at this point. Let's jump to the 2-hour scale. That's an A. We had an ABC, X, ABC. Announcement of the ECB saw gold shooting up here, but it came down very quickly, which is a pretty good sign. It's going to continue down. Yes, it gave back the gains very quickly. That's the best wave count that I have for it. That's an AB. That's a 1, 2, or 1 ending here. It's not going to make a huge difference. We could actually go to the 30-minute scale to see the details from close. So we come down, we have 1, 0, 1. That's your 2. That's 1, 2. That's probably a 3, 4. So there are a few more legs to finish. Yeah, you see very quickly here that we're going to have a few more days looking down in gold. 99.9% certain it's going to do that. If I'm wrong, the most that I would expect at this point is a rebound that we'll see it struggling essentially to reach back to this level. That is 1509. The sign that we are in a lateral movement will be if it manages to climb above the red line that I put here. That's 1496. Okay, do you see this line? Once it crosses above this line, it tells you that it's going for further lateral movement. What will happen at that point? I don't think it's very likely, but just in case it happens, what will happen? The B that I thought ended here would still be ongoing. So that'll be an ABC, that'll be an ABC, that'll be an ABC, and we will have further lateral movement until the B is done. A, B, C, D, E, and then plunge. Now silver doesn't look like it's going in this direction. And also gold and silver in other currencies do not look at all like they are going in this direction. Therefore, I conclude for now that the highest probability scenario is that it's going to continue down early in the week. Hello, hope you enjoyed the clip. I'm back here with some details about my servers currently at 50% off for first-time users. You need to go on my website, the homepage. It's right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users, and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here, it takes you to the page where it explains to you, you should read that. It explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you are not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you are interested, after you took a trial, you're interested to come back, you can still benefit from the low price for the next full year, but you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos. Okay, so you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now I have here resources. There are chart galleries right here, chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very, very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I am based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you a great trading week. Bye now.